I want to bring in our next guest who is actually tracking the spread of the coronavirus. Joining us now is our own Meg Tirrell, Managing Director at RBC Capital Markets, is with her tonight once again. Kennen MacKay. Take it away, Meg.
Scott, thanks. And Kennen MacKay, thanks for being with us again for, I guess, the fourth week going on now. You were one of the earliest people to sort of turn your modeling from biotech stocks to the virus itself and trying to figure out exactly what the curve is going to look like. And now that we're in the fourth week of you talking with us about this, how is it looking?
Yeah, thanks, Meg. So we definitely are slowing. This is something that we talked about a little bit last week. We're seeing a shift in the shape of this curve, moving from a very aggressive exponential function to something that's still an exponential function, but a little bit slower. And that's based on the T-doubling time. The T-doubling time keeps going up. We started with this virus doubling about every 1.6 days. Now we're looking at around 7.2 days as of the latest data today.
So you're also seeing we're heading into what you call a second stage of slowing growth. But you're forecasting that we're going to start to see daily case declines in maybe 4 to 10 days, what you call sort of the third stage of slowing growth. So that's actually potentially around the corner.
Yeah. Now, this is based on data that's coming out of China. That's some of the most mature data sets that are out there in terms of getting a handle on what this recovery could look like as these actually curves start to decline day over day in terms of the new cases. Thinking about that, we're actually modeling in our sort of base case scenario here, this function coming into play towards the end of this week, early next week, actually on Easter Sunday, on the 12th here. In our best case scenario, that could even happen a little bit sooner. But, you know, again, certainly within sort of the next 10 days based on our modeling assumptions.
How much do you think can be trusted in the numbers that we are seeing from China? There was a big report in the Wall Street Journal that's been circulated among epidemiologists. One prominent one sent it to me and said, you have to read this, saying essentially the numbers are looking too good coming out of Wuhan, that they are restarting things, but that the numbers of new infections may not be as low as we're actually hearing. What's your take on that?
Yeah, you know, tough to say. I haven't been able to do any sort of investigative journalism on that. But just comparing that data set to what we've seen out of some of the countries in Europe, for instance, the slowing that we've seen in Italy, which again had quite aggressive quarantines in place, we haven't seen anything, to your point, that's looked quite as good as China. But again, we don't know whether that's because they had that much more aggressive of a quarantine or whether that's because maybe we can't trust that data.
Looking at your model, you know, we've showed sort of the best case scenario, the base case scenario. What it looks like it's been tracking to essentially is sort of along the base case. But are we bending the curve to really get to that best case scenario where you're actually starting to see that flattening come about, as you said, by Easter? Yeah.
You know, I think potentially we could start to see some sustained day-over-day declines around Easter. But you know, it's tough to say. This is something we're continually updating based on the most recent data. And as we saw today and yesterday, that data can be very lumpy. Yesterday, obviously, much higher case counts than anyone had expected. Today, it made it look like maybe yesterday had some pull-through from today's numbers. So, you know, tough to say. What I'm looking for are those day-over-day declines. Again, we're modeling that beginning around the 12th. And again, that all just comes from time since quarantine.